Well, good afternoon, John. It's good to see you again. Busy week. We're recording this on Thursday afternoon, in the week where the Reserve Bank has cut interest rates. We had the official cash rate at 4.35 for the last 13 months, and for the last 4.5 years, rates have just been getting higher and higher. And now for the first time, they've been cut by 25 basis points, much to the relief, I'm sure, of borrowers. John, I assume you were expecting a cut like the rest of the market. But reading into the statement from the Reserve Bank and the comments made by the Governor, Michelle Bullock, it seemed to be more of a what I'd call a hawkish cut. She was kind of warning the market not to expect too many more cuts. What are your thoughts about this topic?
Well, was I expecting it? I think I was on the record as saying we shouldn't be cutting and we should wait. And I think what the Reserve Bank said was essentially what I said. They should be waiting, but they didn't. Throws up the issue whether it was a political decision or not in the environment, which is highly politicised with an election coming. Their commentary around the decision to cut was fairly weak, didn't really justify it. But I think there's so much stress in the mortgage belt of Australia. We've talked about this, and I'll talk about it endlessly in the next few weeks, but it's been very badly managed, the housing market in Australia. People who are entering that market, first home buyers, are paying a hideous amount to enter the market. They're borrowing a hideous amount on any measure. Australian house prices are some of the most expensive in the world. So the interest rate cut was really a relief for those people. And that's it. But she didn't say that. She came up with some other reason that inflation looks like it's peaked, so to speak. And if you go back to some of our commentaries, Paul, and our interviews, now we've been saying that the Reserve Bank had overestimated the outlook for inflation 6 months ago. It's coming to fruition. They said 6 months ago that they thought inflation, they weren't going to look at the absolute number for inflation. They were going to add back what the government cost of living benefits were. And yet this week they just ignored that. So they virtually backtracked on everything they said. Is inflation dead? Obviously not, because Australia has a lot of cost pressures, no more so than the energy market. And we don't know, Paul, in the next few months whether the energy relief is going to survive the election. Are either party going to extend the electricity rebate? And that'll be a significant issue for the outlook for inflation. Without that decision, how could the Reserve Bank therefore cut interest rates?
So there were two other important bits of information out this week. The one was the unemployment rate. We had the labour force growing by 44,000, which was stronger than expected, although the unemployment rate ticked up from 4.0 to 4.1 as a result of the participation rate moving up to a record high, which is a healthy sign. The other data point was the wages growth, which over the last 12 months has grown by 3.2%. So that's quite a moderate rate of growth. I think the rule of thumb that I've sort of thought about this has been that if wages are growing more than 4%, the Reserve Bank gets worried about it. If it's growing less, then they're less concerned. In the September quarter, I think the wages growth was up 0.9. In the December quarter, it was only up 0.65 or 0.7, rounding off. So wages growth is coming off the boil. Does that allow the Reserve Bank a bit more flexibility, a bit more freedom to start cutting further, bringing us back to what might be referred to as a neutral rate, which is a theoretical number? Could be 3.5, could be 3.75, maybe it's 4%. What are your thoughts?
Well, I'll grab that number, Paul. I mean, this is what they just grab a number which suits their purpose to justify a decision they've made. Wages growth is moderate, but so too has inflation growth. But when you look over 3 years rather than 1 year, wages have not matched inflation or the cost of living increases since COVID, and I think there's a gap of about 5 or 6%, give or take. If you go back to pre-COVID, wages were always 1 or 2% above inflation. So we had real wage growth. Since COVID, we've had negative wage growth, real wage growth, some sort of catch-up going on. That's what you expect when inflation moderates, and wages will accelerate above inflation, but not accelerate in terms of wages growth. So there's a lot of strange numbers coming through because we had that spike in inflation. In terms of labour market, I mean, what we're seeing is the aftershocks of bringing in 1 million people, immigrating 1 million people over 3 years. I believe that immigrants in the main, the working immigrants, are more prepared to work than sort of incumbent Australians. So we're seeing immigrants coming to the workforce looking for a job. So you've got the participation rate up, and you've also got the number of employees up. So employment numbers have increased. So I think it's all a reflection of immigration. Going back to wages, I think you would expect wages to moderate in the December quarter. We had a tax cut from July 1, and if you look at the after-tax effect on wages, so nominal wages have gone up, but also after-tax wages have gone up faster. So a lot of moving parts, Paul. The economy is performing as you would expect after the inflation shock, after the immigration surge, after the slowing of inflation, and now we're seeing the interest rate cut, and the economy is, it's not growing rapidly, but all the benefits which are in the employment, the immigration number, then the employment number, and the wages growth should mean that the economy is okay in 2025. That's what I took out of all that.
Well, there are a couple of, I suppose, warning shots for the economy. The one is the big news today is the Prime Minister was in South Australia with the Premier announcing a $2.4 billion investment, or perhaps it's a rescue package for the Whyalla steelworks. So this, if I get my history right, One Steel was part of BHP. It spun it out many years ago. It got into trouble, changed its name to Arium, and has subsequently been forced into administration by the South Australian Premier. Now we are rescuing it with $2.4 billion of investment. Does this point to one of the weaknesses that we have spoken so much about, the high cost of power? I imagine that energy is a huge contributor to the cost base of the steelworks. And does Australia have a future with manufacturing activities such as this, or is this just trying to build up Australian economic resilience?
Big question, Paul. The issue is, would all this come about with government, the federal government and the state government of South Australia? I think the state government of South Australia had to do something, but the federal government coming over the top and allowing the administration to take effect by some sort of guarantee on the credit, on the borrowers and credit, is a significant move by the Commonwealth. But it's in an environment where we're inside 2 months before an election. Now, we've seen the Rex decision a few weeks ago. Now we're seeing the Whyalla steel mill. There seems to be a capacity or wantonness by the Commonwealth government in an election campaign to start bailing out industry. That's not to say decisions are wrong or right. It's just to say it's amazing how decisions can be made quickly when there's an election coming. So we have to put that in context. So governments in the main are not keen to bail out private enterprise, except when there's an election coming. So, and I'm not saying that's Labor. I think that's true of both sides of Parliament. And it's unfortunate because you'd like to see what you said. There's a national policy for some manufacturing in this country. Now, the Prime Minister was in Wales today. I heard him talk to the workers and said Australia's got to play to its advantages. It's got to add value to its resources, and adding value to the immense resources in Whyalla, around Whyalla, and building steel was the way to go. Well, that is completely contradicted by the fact that also there's a massive uranium deposit not far away from these steel mills, and he has no intention of adding value to that. So political talk, political necessity has caused this bailout. I'm not saying it's bad. I'm not saying it's good. I just think we have public policy on the run. We have public policy decisions made and an extraordinary amount of capital committed in a short period of time, which tells you not a lot of work was done to justify this, but it's politically justified because there's an election coming up.
Mm. In the meantime, John, the market's been selling off over the last little while, mainly in the banks. So I think NAB came out with disappointing earnings, and ANZ sold off, Westpac sold off, CBA is down $10 from its record high of 165 down to 155. Banks should thrive in an interest rate environment of where there are rate cuts coming, and they can, manipulate and expand their margins. So the banks are selling off. Is this a warning shot across the bows that perhaps valuations were a bit too rich?
Absolutely. I mean, you just look at the Commonwealth Bank result. It was 2% growth, and it got a bit of a re-rating in the market, and the National Bank was 2% disappointing, and it got a massive 10% correction. And National Bank's PE was set much lower pre the announcement than Commonwealth Bank's. There cannot be that much difference between a 4% variation in earnings off different bases. So the market is in a bit of chaos. We talked about the concentration of the market in banks, but in Commonwealth Bank in particular. When you get concentration in index buying, you get very strange results. I think it is a warning shot. I think we've been flagging for a few months, Paul, that we thought the financial sector of Australia, the banking sector, was very fully priced, and more so Commonwealth Bank. And our view, my view, has been slightly wrong. I thought if there is a correction in financials in the banks, there would be more to be seen in Commonwealth Bank in that correction than the other banks. So far, it's been the other banks. But National Bank's result did stand out a little bit different from Commonwealth Bank because they did disclose bad debt increases, which Commonwealth Bank didn't, and write-offs in their assets, which Commonwealth Bank didn't as well. So a bit of a question mark, why did National Bank have a poor credit performance than Commonwealth Bank? Are both adjusting their books on the same basis, and I guess we'll find out about that in a year or so when we look back on this. But was National Bank conservatively stated and Commonwealth Bank not? There may be an argument for that, but I think the banking sector as a whole is very fully priced and is due for a correction, and that's what's occurring.
One of the positive surprises was probably Telstra, which instituted a fairly large buyback. And I'm sure many of our audience hold Telstra. Is that a good place to hide at this stage?
Well, it got re-rated today, and I haven't gone into the great details. I mean, today I drove back from the Gold Coast to Sydney. Not for this interview, but for other reasons. But all the way down the highway, it was black holes in the network. I'm a Telstra user. I'd say for 50% of the time, whilst I could make phone calls, most of the time I couldn't access the internet. For about half the time, I just couldn't access the stock market. Couldn't access. At some stage, couldn't even access my maps. So I don't know what this commentary is that whilst Telstra is a dominant player, and then they're saying they're reinvesting in their network to deal with some of these issues in against what Vodafone, Optus are doing in response. I put a big question mark over this 5G. I just can't work out how they could say it's significant. I also heard an interview on the ABC about the complaints are at record highs about black spots. and non-performance of the network. On my property, I've lost access to my security. I don't want to say where it is in case there's criminals out there, but I mean, I have a monitoring system which now doesn't work because the Telstra single was not strong enough. And that hasn't been the case for the last 5 years. So they got rid of 3G and now I've got 4G, 5G, and I don't get proper access for my security. So, Telstra can claim that they're doing well, and I guess the market's excited, but they've increased dividend. They have a massive capital expenditure program, and I can't work out why they're having an $800 million buyback. I don't know how they can come up with that sort of logic. They should not be manipulating their share price with buybacks. They should be investing in their network and getting it right. And this is where public companies who are running systems for the public seem to have unconstrained ability to waste capital and not drive capital, because the one thing you need is proper performing infrastructure, because that drives productivity of the country. And when you get a private company which was formerly public, Telstra, a public listed company was previously government owned or taxpayer owned. I mean, they seem to me to be rewriting history. And I don't want to be overly critical, but I can't see as a user that I'm getting a better service than I was 5 years ago.
John, I spent part of my morning reading your very excellent article about the housing crisis on First Links, and I thought it was very insightful. There's a lot there. Do you want to give us a few of the headlights, the key messages about the housing crisis we're facing?
Well, there's one key message, Paul. I mean, how can you make property or housing more affordable by sustaining and pushing up an excessive price? The whole thought process around policy in this country, whether it's interest rate deductibility on investment properties and negative gearing and tax-free capital gains for housing, unconstrained credit for banks, in terms of what they offer borrowers. I mean, insurance, mortgage insurance, which seems, ridiculous that you shouldn't have to mortgage insure if they were properly credit rated. I mean, everything that happens in this country is to drive the price of property up when we're talking about a market which, the average person entering the market, the average household, new home buyer, finds it unaffordable to enter the market. So the policy is not fit for purpose. And my point is, I think this has been running for 20, 25 years. There's been a lack of coordinated policy to say that housing is an essential, it's essential for the public. It's essential for the average person, the average household to be able to buy into a market which is affordable. We haven't managed it. And now we're dealing with the effect of that, which is we're trying to get people highly leveraged into a market to sustain the price of that market, so the people who own property don't feel aggrieved. And that's a political issue. Both parties play the same game. They don't want housing to come back to affordable levels. At the same time, how do you make housing affordable if you're not going to drop the price, and if you're going to keep continually increase it? Well, you're going to create inflation, which has to be overmatched by wages. That's not going to work longer term. So unless we get this market under control and get a bipartisan approach to a housing policy, then the fear is I have at some point in the next 10 years there's going to be some financial issue which causes a sharp correction in the property market, which could cause issues for the financial sector as a whole. Now, we had a forerunner of this in the GFC. Yes, it was in Australia, but we had pockets of it in Australia. We had very significant housing downturns across Europe and Northern America. We escaped it. And what did we learn from it? I can't see that Australia learned anything from that when we should have. So we're going to have to deal with the consequences. My final point, Paul, is I just reflect on myself, as it's easy to reflect on yourself. When I bought a property in 1990, I paid 3.5 times my salary. If I bought the same property today, I'd be paying 11 or 12.
Wow.
So to say that housing is a great investment, it's true, but there's been tremendous, that multiple of salary is like a P expansion of the stock market.
Yeah, it's like going from 10 to 30 on the price earnings ratio.
It's a great investment if the multiple keeps on expanding. But the multiple, as we talked about earlier about banks, there gets a point where it's overvalued. And what I think we're dealing with in Australia is trying to sustain an overvalued housing market by every measure we can and say to first home buyers, oh, you've got to get in because, it'll be a great investment over the next 30 years. Well, you don't buy housing for investment, or you shouldn't unless you're investing in property. But if you're owning your own house, is that really what you should be doing? Becoming highly levered into an asset, which is your home. I just question that is logical for as a public policy. And I'm putting it out there. I think it's time that the political parties and the political leaders of this country said we need to settle this problem and solve it. Yeah. And we can do it. There is bipartisan decisions. They can make bipartisan decisions over, donations to major parties and smaller parties. That came out of nowhere. They can agree on that. They can agree on 40-year plans to build submarines, but they can't agree on a plan to make housing more affordable in Australia.
Yeah.
So the political will's at this point is not there. And I think the public and the voting public got to bang these political parties together to get them to actually create public policy for the greater good.
Yeah, well, it's a good point to end on. We've run out of time, but I think it's an incredibly important issue, as you say, and I think your piece in First Links is a very good starting point for more serious discussion. So I'd recommend people try and access that, and hopefully we can post it on the Climb website and make it available. John, thank you so much for your time. Another interesting discussion, and we will see you next week.
Thank you.